Now, one other kind of thing that you might have a similar situation is you might determine that we're not going to receive a payment on an invoice that is out there, right? So if you're looking at an invoice and you're saying that you're not going to get paid, you might do a similar scenario, issuing the credit memo, but making it go to accounts to bad debt expense. So you might say, for example, let's do it one more time. Let's say we have an invoice this time. Let's say it's for customer 3, and we'll say this happens on, let's say, 02/01/25. Let's make a different item. Let's make it service item 1, just so we don't have to deal with inventory for this one. And we'll say, okay, and it's going to be a service item. And service item 1, let's say it was for $300. It's going to go to service revenue. I'm going to remove sales tax on it. Non-taxable good. Okay. Save it. So we'll record that for $300. So what's this going to do? Increase revenue and increase the accounts receivable by $300. Subledger going to customer. What happened? Customer 3. Is that who I'm on? Customer 3. All right, let's save and close it. So now we have revenue going up. So if I go into the sales area and I go into my customers, now I've got customer 3. Now let's say customer 3, we just say they're not going to pay us this amount in some future time. They're not going to pay us. We've determined we want to write it off. Well, we might use a similar system to write it off to bad debt, like a credit memo, right? So I might say, okay, I'm going to just write that off by doing a credit memo for customer 3, and let's say this happened on 2/2, and this, what did we sell them? I could mirror what we sold them, which was an service item 1, but then I'm going to make another line item here to write it off not to income but to bad debt. So I'm just going to call this bad debt item, and I'm just going to copy that tab. I'm doing this kind of fast because it's a similar in concept and we're running long on time. You're pulling too much time, man. Let's make it a service item. There's the description. I'm not going to put a dollar amount in it. I'm going to not do the sales tax because I can add the sales tax if needed. So non-taxable, non-sales tax. Okay, boom, boom. So then I'm just going to go boom, boom, and then there's going to be 300. Now, in this case, I could still just remove the dollar amount here, or I could just delete it entirely. Why? Because this is just a service item. There's no inventory involved. I don't need to deal with inventory. So I don't even really need this first line item at all. I could just write it directly to bad debt expense because we're not dealing with the return of inventory, basically. And so I could then just say, let's delete that and then allow me to match this out. So then I'm going to say, what's this going to do? It's going to be reversing. So it's going to record a decrease to accounts receivable, and the other side is going to be driven not to income, not reversing income, but rather to bad debt expense. Hopefully I set that up. Wait a sec. I don't think I set this up right. Let's do this again. Bad debt 2. I did it too fast. Let me just do it again so I could set it up properly. Sorry about that. I'm running too long. I need it to go to, we're going to call this bad debt 2. Boom. It's not going to be taxable, but I want it to go not to the income account. I want it to go to a new account. Add the account, which is going to be called bad debt 2. Okay. And it's going to be an expense type of account. Boom. And then just bad debts. Okay. Bad debt. All right. So we'll just do it like that. All right. There we go. So now it's going to be driven to the bad debt expense. Okay. And it was for 300. All right. There we go. And then it's not no tax. So I'm just going to remove the tax. Okay. Hopefully I did that right. All right. Let's close it up. All right, so now we have the same thing happen. The credit memo, the invoice, they connected them together with the payment form. If I edit it here, it's connected it out. So everything is nice and neat within that client. Everything's tied out. We don't have anything outstanding. If I go to the balance sheet, we could see that the revenue account should go up and then back down again. Revenue account goes up and then back down. Invoice credit memo. And on the profit and loss, this time we see a similar process, but the revenue account went into the sales, the service item of 300, and then the expense then didn't reverse that, didn't go into accounts receivable, but we put it instead into expenses, bad debt expenses, which is up here. There it is, bad debt expenses. So there, it nets out there. So that's another way that we format you might use that. So that's the general idea with the credit memos.